The sensex and nifty declined for the 8th straight day despite a late recovery today. The last 5 sessions have also seen the biggest weekly loss in 2 months. Will this correction continue? Hello and welcome to Editors Roundtable. It's been a tough week. I am Rima. With me are Prashant, Nimesh and Nigel. And our guest today is Nimesh Chandan of Bajaj Finserv AMC. Hi guys, how would you describe the week?
Well, brutal.
Good.
That's the way to describe. Mid-cap index down 7, small-cap index down 10, micro-cap index is down 10, and even the SME IPO index is down in double digits. So that's the kind of pain you're seeing in the portfolio levels now, Rima. We may talk about, pullback, bounce back, whatever. The fact is now it's hurting the portfolios at every level. Whether
I
it's a
checked my
retail,
portfolio and it's hurting.
It's hurting everybody.
That's right. I think sentiment got punctured.
Absolutely.
And the structure itself, or the nifty levels, when you look at the structure, people say that got punctured. The graph is punctured. But now sentiment as well was punctured. Like, if you speak to a lot of people, no one wants to talk so much about markets as well. They're asking about your family, how are things, and this, that, and all. There was a time on Friday evening, you go to have a drink. People are giving you stock, telling you this stock will do this stock will do that. Some market, some non-market. So I think some rationalization is creeping in there, and. I don't know how to say it, but for the longer term, it will be good.
I was out a couple of days covering the conference, and I'll just give you a bit of a sentiment barometer. In BKC, in the heart of where all the market guys are, normally after 2:30 now, you won't get place to sit in a coffee shop. Day before, it was virtually empty. That shows the kind of sentiment is there on the street.
And every time there was such a fall, like a 5%, 7%, people were always asking what to buy next. Now, I'm going to put in money. This time, there's like radio silence.
Yeah, this is an interesting point because sometimes you want to speak to that one particular person at a conference. You try to make your way to the coffee shop. You're like, nah, yeah, that other guy is there. Let's go to the other one. But this time it was empty.
You can aram talk.
Which means people don't want to spend. That's what's the takeaway.
No, generally, forget spending. People don't want to talk also.
$250.
That's the kind of sentiment, Prashant.
I would spend $250 but bad market or good market. But I mean, I know you like your coffee. But I think maybe another thing which is happening is that people protecting their profits, right? I mean gains, because it's come to that. So today we were looking at the mid cap and the small cap indices. They are now down to June 4th, 2024 levels, which was that election day low.
Yeah.
Actually, not the low, the close, because the low is still a little down. And what happens is when the market doesn't recover 8 days in a row, right? Dhire thoda himmat tooti hai, as they say, right? And then you want to say, well, if this is really something big, because 3 days, 4 days, you think, well, bounce is coming, bounce is coming, bounce is coming. 8 days in a row, then you start to wonder, well, maybe, if this goes on, I'll get closer to what I bought at and absolute returns. But gets hurt initially is relative returns. You were up, say, whatever, 50%, now you're up 30%.
Yeah.
But when you're actually close to buying prices, in many cases, I think people who entered in the market second half of 23 or 2024, I think they're there. Absolute, many portfolios will be down at absolute level.
Yeah.
So I think those people will start to, and I think we saw some of that yesterday and through the course of the week, actually, really. But I think Nigel has got some data on the bounce which is coming.
Let's try to brighten things up. Right?
I thought we'll start on a brighter note, but maybe started with it's a brutal week.
That was coffee. Now, for the weekend, have a couple of large scotches. You'll feel better. Okay, let's talk about data, though. We're down for 8 straight sessions, right? And this has happened in the past. It's happened a few instances. I was looking at it from 2013 till now. So this time around as well, we're down for 8 straight sessions, and we're down close to around 3.3%, very, very approximately. And the last few instances, it seems to be more of a financial year-end phenomena. Last 3 times, we were down either in February or even in March, and that point of time as well, we lost close to around 4 to 4.5%. But what's encouraging is what happens in the week following these 8 sessions of losses. And the following week, actually, in 3 out of the 4 instances that we have pulled out, that's up for you on the screen, we have normally seen a bounce to the tune of roughly around 2.2% to around 3.5%. So on 3 out of the 4 instances in the past where the Nifty has lost out for 8 straight sessions, normally we have seen that evidence suggests that the following week you do see a bit of a bounce. So that's the hope. Just one time, I think in 2013, as this data point is telling you, we didn't see a bounce. In fact, we were down close to around 1% even in the following week. So clutching on to what happened the last 3 times, don't rule out a bounce the next week. That's all I can say.
So, Nigel, just to add to what the data you've said, I just looked at the broader markets, mid cap, small cap, micro cap, and Nifty 50 in the last 5 years, like since COVID. Barring the COVID times when the falls were pretty sharp, 40, 30, 50%, the average mid cap fall has been 18-20%. We are at 19% fall now. In the small cap, the average fall has been 22 to 25, 27%. We're at 22% fall now. Yeah. And in the micro cap, the average fall has been between 23, 25%. We are down 22% now. So even from that perspective, from that data, barring the COVID lows, it looks like from these levels, you generally tend to see a bit of a pullback. So your data of 8 days of sell-off and a bit of a turnaround, and the fact that even in the last 4-5 years, from those 20-25% falls in the broader markets, we've seen a bit of a pullback. So maybe that's a data where it calibrates on a potential pullback from here.
On that kind of an optimistic note, let's get in Nimesh Chandan of Bajaj Finserv AMC, who joins us. Hi, Nimesh. Well, it's been a brutal sort of a week. A lot of portfolios got punctured this week. How are you feeling right now? How much away are we from, the bottom? And what about the broader market pain? Your sense on it.
So actually, these last few days, it seems we have seen some investors or traders acting out of panic. People have moved from invest first, investigate later to sell first and then inquire what the negative news is. And this is creating a bit of a fear among investors. The discussions on SIPs getting closed, the discussions that Trump will put more tariffs on India, even sectors like pharmaceuticals, people think that they won't be able to pass on that incremental tariff. Now, those are low probability extreme cases which suddenly have become high probability scenarios for investors, and people are acting on that. I think this kind of a fear is I think a bit dangerous in terms of the short term. Ideally, right now, we should be talking to investors about using these opportunities to invest. But I can understand that most of the people are a bit skeptical, and I hope we don't see another wave of panic selling that can come, because, we can discuss this, but I think fundamentally things have only got better in the last 2 months, according to me. So that's what I feel.
It's good, yeah.
All right, well, from one Nimesh to the other Nimesh, right? Nimesh, hang on. Nimesh, go to the wall. Tell us the setup and how things are looking, what's the damage, and I think those factors which Nimesh was talking about, fundamentals, actually, the news flow at the margin is getting better.
Exactly.
It's getting ignored now.
Correct.
But tell us.
Correct. So, as we all discussed, it was a brutal sell-off. So let me just go to the wall and explain what kind of panic or what kind of sell-off we've seen in the market, especially in the broader market stocks. So it's been quite brutal, right? That's the word to explain. If you look at this week itself, the mid-cap index is down close to 7%. Small cap and micro cap indices are down 9 and 10% respectively. Having said that, from the 52-week highs, look at the kind of panic we are seeing in the markets now. The mid cap index is down 17%, as the data suggests. The small cap index is down 20, and the micro cap index is even down 20%. That's the kind of sell-off we've seen only in the last couple of months. The sentiment is clearly weak. This shows up in this chart as well. The second big thing to track would be the margin funding data. On 7th of Feb, it fallen to 78,000 crores, 67 on Feb 10, and now back to 78,000 crores. So it has come down from the highs of 90,000 crores to 78,000 crores. So just to give that picture on where the margin funding looks like. However, as even Nimesh pointed out, there are a lot of fundamentals which are turning positive at the margin. The first big positive was the budget itself, focusing on consumption. Even post the budget, the RBI, the first rate cut came in from the new governor. They've promised for further, and it was focused on pro-growth as far as the RBI move was concerned. So that was one big positive at the margin. The second big thing was there was a lot of concerns about the new income tax bill. Thankfully, there were no negatives or no negative surprises in that as well. So that's the second positive. Third, the big question was the earnings. How far the earnings can fall and whatever. The earnings so far in Q3 was not bad. It was actually in line. I'll get some more data on that. The fourth was there were a lot of worries about the mutual funds or the SIP money. Even that has stood in the month of January. February, of course, we'll have to see, but at least till Jan, it was quite strong. And last but not the least, some of the high frequency indicators have started improving at the margin. So these are the few points which the market seems to be ignoring in this sell-off. Also, one more data I wanted to add. I just looked at the health of the India Inc. I was looking at the top 1,000 companies in terms of market cap. 50% of the companies are sitting on cash, so they are net cash positive. which means that there is no leverage in within the corporate India, and which means that there could be no big risk for the banks and the financial sector. So that's the other important positive to watch out for. Lastly, I've just collated the views of some of the influential names which came through this week. Rhythm Desai, he's been bullish on the market, but he believes that the underperformance could reverse in the next few months vis-a-vis the global markets. Also, what are the best ideas according to him? Private financial is something he's betting on, consumer discretionary, as well as select industrials. That's his broad view on the market. The second is Amish Shah of BofA Securities. Here's the earnings preview, Q3 earnings preview according to the BofA Securities. The Nifty earnings has been 7%, which was almost 3-4% in the last quarter. So there has been improvement there. The broader market, NSE 200 earnings have been 11%. So that's something which is heartening. And also what BofA believes that the margin downgrades have been quite low post the Q3 earnings. So that's the other view. The next big view is Chris Wood of Jefferies. He's put out a note today morning, and he's actually cut the India weight by 1%, adding 3 more to China in the ex-Japan portfolio. So that's a bit of weight reduction for India from Chris Wood. And lastly, Venugopal Gare from Bernstein. Bernstein has been, sounding very cautious on the broader markets. They believe that, while they see a recovery in the second half on the overall market, he still believes that there is no big reason to bottom fish in the broader market, small and mid-cap stocks, so to speak. So net, while there is a lot of panic in the market, the indices are down 20%, the broader markets, but there are some positive factors which looks like market is ignoring at this point in time.
All right, let's put it to Nimesh Chandan, some of these points. Nimesh, I think ties in with what you're saying. Valuation excesses perhaps have corrected. It's arguable how much more to go. Maybe there is more to go, a little bit more to go, as many have been pointing out. But a large part of the froth perhaps is now out, and at the margin, news flow is getting a little better.
In fact, Prashant, I'll take all the positive points that other Nimesh has said and raise it further. I was looking at the Bloomberg estimates of average target prices of BSE 200 or NSE 200 companies. And this is the average target price for 1 year. So it is not the most optimistic, it is not the most pessimistic price target, an average price target of these companies. And about 95% of them, so about 180 to 190 companies, have a positive target price from here on an average. So if, say, I'm wrong, if some of these estimates get revised later also, even if we have 60-70% of companies in a particular index, like broad index, like a 200 or something, seeing some kind of valuation comfort that the analysts have a higher target price for them, I think that should be comfortable enough for stock pickers to go fishing in this market for a long-term investment. In the short term, I'm sure there will be some myopic loss aversion that will stop people from putting in more money, and I can understand that. But clearly, the investment case for India has got stronger, and the valuations have become more comfortable.
Yeah, go ahead.
Chandan, a word on financials, because one of the key positives which I highlighted was the fact that RBI did cut rates by 25 basis points. They've infused liquidity. The approach was quite pro-growth. In that context, given the fact that the financials have not done well, what's your view on the entire financial basket within NBFCs, MFIs, and the private bank names?
We love private banks. The valuations are very attractive. I think the growth next year, I think for the entire sector, the growth next year will be better than this year. Yes, there could be some pockets in some NBFCs or some segments within financial services who could see some kind of uptick in NPAs before things start getting better. But by now, much of this is in the valuation. Some of these large private banks have been at the same price for, I think, about 5 years or 3 years. And they have grown earnings. They have a good runway to grow for the next few years. So actually, BFSI is a very good contrarian investment sector at this point of time. And slowly, we will start seeing some triggers coming as liquidity gets a little comfortable, as interest rates start moving down, and the deposit growth starts coming back. So these guys will be able to do their credit growth or fund their books much better.
The other thing, Nimesh, we had Atul Mehra with us at the Sidelines Access Conference. Yeah. He was talking about this $55 billion pipeline. But, these things are self-correcting. If markets are, that 55 will very soon become, the pipeline will shrink because markets are not conducive. And I think Shireen was at that private equity, the IVCA conference, and she was saying that already, at least the private equity chaps are telling her that a lot of the IPOs, etc., are getting pulled. I mean, because they're not getting the valuation. I mean, you need to get at least 30-40% higher than the last round, which is not happening right now.
And I think some of that will be very healthy, because otherwise some people are trying to make space to apply for their IPO, so that's why they are offloading something out here. So that will be good. And I hope, in the coming weeks, Nimesh as well will join in and tell us, you have been telling us, Nimesh, about those large blocks that have taken place. Hopefully the things turn around before the start of the next quarter, and maybe we'll see promoters come in there, chip in, maybe some kind of buybacks as well, and just get some confidence back as well. That's the hope, I guess. And that will give markets some kind of positive sentiment as well. Well, I think we'll slip into a short break. You come back, we'll continue our discussion on a lot of points. Stay with us.